The U.S. housing market trends are exhibiting significant fluctuations, raising concerns about a potential housing bubble. We're looking closely at the market's current state, considering various factors. The U.S. housing market has seen rapid growth in recent years, thanks to low interest rates and high demand. Yet, signs suggest this growth might be slowing, with some experts fearing a bubble could burst. Key takeaways: the U.S. housing market is experiencing fluctuations that could indicate a potential bubble. Low interest rates and increased demand have driven growth in the housing market. Experts are warning of a potential bubble burst due to slowing growth. Several factors are contributing to the current state of the U.S. housing market. Current state of the U.S. housing market: recent statistics show that U.S. housing prices have seen a steady rise, with a 5% national average increase over the last year. Yet, some regions are experiencing a slowdown. For example, cities like San Francisco and New York have seen housing price drops. This is due to high inventory levels and decreased demand. The national median home price is $350,000. Existing home sales have decreased by 2% month-over-month. New home sales have increased by 5% year-over-year. Regional market variations: regional market variations are crucial to the U.S. housing market's overall health. Areas with high demand and limited supply, such as Seattle and Denver, are witnessing price hikes. On the other hand, the Midwest is experiencing more modest price increases due to lower demand. Regional differences are shaped by local economic factors, including job market growth and industry trends. For instance, cities with a strong tech industry see higher housing demand. This contrasts with areas experiencing industry declines. Signs that a housing bubble in U.S. about to pop: the possibility of a U.S. housing bubble bursting is growing, with several market indicators flashing warning signs. It's essential to understand the current state of the U.S. housing market. We must examine the signs that could signal a bubble is about to burst. Price-to-income ratio analysis: the price-to-income ratio is a key metric, comparing housing prices to average incomes. A rising ratio suggests housing prices are outpacing incomes, potentially signaling a bubble. Several major U.S. cities are showing signs of strain in this ratio. Mortgage rate impacts: mortgage rates significantly influence the housing market. Lower rates can fuel a housing boom by making homes more affordable, while higher rates can dampen demand. Recent mortgage rate fluctuations have impacted housing affordability and demand. Historical bubble comparisons: comparing current trends to historical housing bubbles offers valuable insights. The mid-2000s housing bubble was marked by rapid price growth and lax lending standards. While similarities exist, there are also notable differences in the current market. Investor speculation indicators: investor speculation can rapidly drive up housing prices, often before a bubble bursts. Signs of increased speculation include rising investor purchases and more aggressive lending practices. Monitoring these indicators is crucial for understanding potential market shifts. Stabilizing factors in the housing market: the U.S. housing market is currently stable due to several key factors. Understanding these elements is crucial as we navigate the market's complexities. We will examine the critical stabilizing factors at play. Stricter lending standards: post-2008. After the 2008 financial crisis, lending standards in the U.S. tightened. This change has lowered the risk of subprime lending, stabilizing the housing market. Stricter regulations have made sure borrowers can repay their mortgages. Supply constraints and housing shortage: many U.S. regions face a housing shortage due to supply constraints. This shortage has pushed up housing prices, as demand exceeds supply. The lack of available housing plays a significant role in maintaining market stability. Demographic demand drivers: demographic factors, like millennials entering the housing market, drive demand. This demographic seeks to buy homes, sustaining demand and supporting market stability. The impact of demographic demand drivers is a key aspect of today's housing market. U.S. housing market outlook: the U.S. housing market is a complex tapestry, with signs of a potential bubble offset by stabilizing elements. Regional differences and external factors like mortgage rates and investor activity shape the current state. These elements intertwine, creating a dynamic environment. Examining the narrative of a U.S. housing bubble, we must focus on the price-to-income ratio and historical comparisons. Mortgage rates also play a significant role. Yet, stricter lending and supply constraints have helped stabilize the market. In summary, our analysis underscores the need for ongoing monitoring of market trends and indicators. This approach is key to accurately forecasting future developments. By dissecting the interplay of various factors, we can better understand the U.S. housing market's complexities.